Hello everyone, myself Vaibhav. In today's session, we are seeing fresh bearish breakdown in the USD JPY, and this has happened after the news was released that Mr. Trump and Mrs. Trump have tested positive for the coronavirus, and this has resulted in the swift and large move on the downside, and the USD JPY has come crashing down to 105 level. This is likely to change the trajectory of the USD JPY from the short to medium term perspective. So we will see if there are any emerging opportunities for the trading in today's session. If we consider the trading context for the day, we have a lot on the data docket. Earlier during the Asian trading hours, we got these unemployment numbers for the Japan, and Japan has been one of the better performing countries in terms of handling of the COVID epidemic, and that is also being reflected in this unemployment rate. It has climbed up to 3%, but if we compare it to the other major peers, we see that it is lot lower compared to the other countries, and that's why I said that Japan has been one of the better performing countries. But still, for the Japan, this is the highest the unemployment rate has been in last 3 years. But I think now that the situation is stabilizing, we will see better numbers moving ahead. In the Australia, things have actually taken a turn for the downside, and for the month of August, the retail sales were down 4% in terms of month on month after rising for last couple of months, and this is the first decline since April, where we had seen the sharp decline in the retail sales on account of the strict enforcement of the lockdown in the first phase of the coronavirus pandemic. Now, as things are again looking a bit tough in the Australia, as one of the major province in Australia has been forced into the lockdown, and because of that, we have these economic numbers which are pointing downwards. We also got the CPI numbers for the euro area, and here the deflation has actually depended, and now we have the figure at minus 0.3% for the month of September compared to the prior month's numbers at minus 0.2%, and this deflation is going deeper and deeper, and it will take a lot of time and effort both from the central bank, the ECB, as well as the respective governments of the euro area economies to act in tandem and pull the euro area from this economic abyss. Later in the day, we are scheduled to get the non-farm payroll data, and here we are likely to see the job addition of around 1 million, and if we consider the prior month's number, the reading was fairly close to 1.4 million. But as the markets are stabilizing, and we have seen the flattening of this trajectory of job additions, and I think this month the figures are likely to remain below 1 million. And if we take the total count after also considering the job lost in the month of March and April, we are still almost 10 million jobs lower in a cumulative basis. If we take together the job lost and then jobs added in the latter months, we are still in the shortfall. Now let's shift our attention to the technical outlook. Here we will first see the USD JPY, and then we will move on to the Euro USD. Let's start with the USD JPY technical outlook. This is the daily time frame chart, and here the USD JPY had consolidated well closer to the 105.5, and then as I said, the news came in and we have the fresh breakdown on the lower side, and I think now the roof has been pretty much made on the higher side, and unless and until we have the break on the upper side, we can pretty much be confident of the possible trajectory of the USD JPY, and we can indeed bet on the bearishness in this momentum. And because of that, all we have to do is look for the opportune moments to get involved for the short sell trade in the USD JPY, and I think the risk reward ratio is also going to be in our favor, as well as the fundamentals are also pointing to the possible weakness in the USD JPY combination, as the JPY is likely to appreciate further, and we might see it moving closer to these prior swing lows around 104. So let's see how we can capitalize this situation to our advantage. First thing, we will have to take into account this central pivot point, and I feel we can utilize this central pivot point as our decisive marker. Anything above that, we will have to be cautious, and as long as the price action is taking staying below it, we can be more confident of the possible move on the downside. And if you consider the regression curve, as the price action was on the upper band, and it was pretty range bound and consolidating closer to this middle band level, we had this flattening of the regression curve after this steep slope on the lower side. And now, as the price action has again broken on the lower side, we can expect the USD JPY regression curve to give this indication, but it will take some time, and till then all we have to do is rely on this central pivot point zone and watch out for the price moves beyond that. So coming to the hourly chart, we will have to utilize this near-term resistance zone of prior swing lows, and 200 SMA. We have this 200 SMA around 105.38, almost the levels for the central pivot point of the pivot point series also. So we have both these factors around the same area, and we also have this immediate swing low. So you can consider this price zone of around 105.4 as our resistance zone, and if the price indeed moves closer to that, I think that would be an awesome opportunity for us to get involved for the fresh trade while keeping the stop losses just little above this immediate swing high. So for example, we can keep stop loss anywhere close to 105.7 if we are targeting the entry around these 200 SMA anywhere close to 105.40. And then, as I said, on the lower side we have a lot of space for the USD JPY to dive deeper, and as a result of that, the risk reward ratio would be better than 1 is to 2. Even the 104 levels can be expected, and if we don't really want to wait that far, I think we can pretty much expect the break below 105 to the levels towards 104.6 to 104.7. And as I said, it will give us the risk reward ratio, which is going to be even better than 1 is to 2. Now let's see how the Euro USD is shaping up. Euro USD is basically at the crossroads, and any break on the either side is going to decide its trajectory in next couple of sessions. Here, if you consider the price action in the Euro USD for last couple of sessions, we had the turnaround happening closer to the 50% zone of this prior rally, starting from 1.12 to almost 1.20, and now it has again gotten closer to this EMA combination, the 10 and 20 EMA, and it is hovering close to this band closer to the 20 EMA. And 20 EMA on the higher side has been acting as a resistance, and we have seen the price action being pulled lower after testing this 20 EMA price zone. So we have to be watchful, and I think we are going to see the break, and then accordingly we can indeed take the position for the fresh trading opportunity. If you consider the regression curve, it is still bent on the lower side, but the price action is now concentrated in the upper band, and that is also one reason to be a bit cautious. But one thing which needs to be crossed for the further confirmation of the bullish trajectory from the medium term perspective is this central pivot point. We have the central pivot point around 1.178, and right now the price is 50 to 60 pips lower than that. And as I feel, that we will need the fresh break below that for the trajectory to change from bearish to bullish. From short term perspective, the price action is looking increasingly indecisive, and because of that, if we are going to look for the fresh trade in today's session, we will have to rely on this price action trajectory, the formation of these prior swing highs and prior swing lows, which can be taken into account as our guiding factor. We can use this price zone around 1.168 as our deciding marker, and as long as the price is above that, we can be confident about going for the fresh long positions. And as you can observe, we saw this turnaround happening in today's session itself. We saw this sharp fall in the euro USD and then equally sharp recovery pushing the euro USD higher. So here target the 200 SMA zone for the fresh entry. Even in yesterday's session, we had talked about this possibility of looking for fresh entries anywhere close to 1.170. We have to talk in terms of the price band. We can't be really sure about the single price, but the price band of around 1.168 to 1.170 is an excellent opportunity to go for the fresh trade. But we might need to wait out if you have missed on this opportunity. If you had gone through yesterday's session, then I think this might have been on your mind, and if you had taken this position, I hope you might be sitting on the good amount of profit. Now, moving forward, also not much has changed apart from the fact that Euro USD has taken a lot of time in this consolidation phase, and we haven't really seen any big move on the either side. So watch out for this lower side support zone, and unless and until this support zone is broken, we can be fairly confident of further continuation of the upward trajectory in the euro USD, and we can target even the price levels of around 1.18 while keeping the stop loss anywhere close to 1.165. So for a risk of around 40 to 50 pips, we will be in position to target almost 100 pips on the higher side, and I hope that will be good enough. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.